Greece is standing firm in the ongoing drama over its debt. I'm joined by Dr. Dennis Novick, Associate Professor of Economics at the University of Warwick. Dr. Novick, Greece's Prime Minister addressing Parliament today, published reports say he declared the IMF has criminal responsibility for Greece's crisis. What's your reaction to that?
Well, criminal responsibility is strong. It's a very strong expression, so I don't know how helpful that is. But I mean, there is some truth in that statement in the sense that Greece was really forced to its knees because of the austerity program imposed by the IMF and the European Union Commission. So let's not forget that the Greek economy went down by 25% since the last peak. Unemployment is also around 25%. These are horrible numbers. They're Great Depression level, and Greece is in a big mess to some extent because of the imposed austerity. So I can understand that there's a lot of anger on the Greek side, but of course that's not the full picture. There's other things happening. So Greece, to some extent itself, is responsible for the mess that they're in.
Euro area finance ministers are meeting on Thursday. What, if anything, can they do at this point?
I don't think there's much that the Euro finance ministers can do at the moment. I mean, there hasn't been any news over the last couple of days. It's probably all going to end up being a tight deadline towards the end. At the end of this month, the IMF needs the money back, and if Greece doesn't pay that, there will be default. And it just remains to be seen whether Greece will scramble the money or not. If they default, they will default, and then we'll see what happens then. It might be a bit of an economic mess then, if we don't resolve this before then.
Is a Greek exit from the euro looking more certain now?
Well, it's becoming more likely day by day, but that doesn't mean that it will happen. I think at the end of the day, it's still in the interest of Germany, France, and in fact every other member country of the Eurozone to stay within the Eurozone. Greece shouldn't leave, and Greece itself doesn't want to leave. But, you know, sometimes things can go wrong and mistakes can be made, and we might end up with this result, unintended, that Greece will leave.
This crisis is weighing on stocks in Greece, in Europe, and in the U.S. Is the only way to stop the bleeding through a deal? And even if there is a deal, won't it take years for Greece's economy to recover?
Again, I think it's very uncertain at this stage whether there will be a deal anytime soon. The financial bleeding will continue. The stock market is down already significantly. More and more people are withdrawing money from Greek bank accounts. So there's a serious risk of a liquidity crisis in Greece. And in any case, this will not be over. Even if Greece does get a new bailout package in the next couple of days, this will continue for years and years because the Greek economy has to recover from the very, very trough that it is in right now. There will be no quick solution in any scenario.
Dr. Dennis Novick, thanks so much. I'm Rhonda Schaffler for The Street.